Hello everyone. Welcome to video 7 of Module 4, Chapter 11. In this video, we're going to be talking about transferring dividends to a spouse or common law partner. Give me a second to just share the screen. Tax credits revisits. The first tax credit we're going to revisit is these dividend tax credits. We're also going to talk about charitable donations in the next video. But for this revisiting of dividend tax credits, I think it's pretty straightforward in the sense that you are allowed to transfer dividend income if it creates or expands the spousal tax credit. And the reason for it is demonstrated here in this example. In 2024, Mr. Bartlett's only income consists of $12,000 in eligible dividends received from taxable corporations. Dividends have to be grossed up to consider the tax portion that would already have been paid by corporations. So even though Mr. Bartlett received $12,000, his income will report $16,560. It will be grossed up. Now, there would be no tax payable on this amount of dividends for an individual with no other source of income. Because of the income receipt, Mrs. Bartlett is not able to claim a spousal tax credit for Mr. B, and Mrs. B has other income of $25,000. So what's happening here is Mr. Bartlett only has this dividend income, and it's of an amount that it's kind of being taken care of by his basic personal tax credit. The basic personal tax credit can be transferred as a spousal credit if it's not being used, but Mr. Bartlett is using it. So he's using his basic personal amount, and Mrs. Bartlett doesn't get the spousal credit. So why is this an issue? The issue is because dividends get a tax credit for that portion of taxes that the corporation's already paid. The individual has to report the full income amount, that's 16,000, but that 16,000 is considering tax amounts that a corporation's already paid from their hands. Dividends are an after-tax amount. So Mr. Bartlett will report the full amount, 16,000. They'll calculate taxes, but he will get a dividend tax credit. But if that grossed up income is already being accounted for, um, or is already being handled by the basic personal amount, those dividend tax credits aren't getting used. So we're recognizing that a tax amount has been paid, but the taxes or the benefit of reducing taxes is not being seen in this situation. So we have dividend tax credits that are not functioning because the basic personal amount is using up that income, or at least undoing that payable. So the solution is we can transfer the dividends from Mr. B to Mrs. B. Mrs. B will now receive the full spousal credit. So because Mr. B now has zero income, his basic personal amount will transfer to Mrs. B. She'll be able to use that amount and she'll be able to use the dividend tax credits. So now we're not losing out on anything. They'll get the full spousal amount, which is if the basic personal amount is 15,705, a benefit of 2,356 will be subtracted from their taxes because Mr. B has no income. The taxable dividends, 16,560, will be added to Mrs. B's income. So that will constitute additional taxes to be paid. So the spousal credit coming over will save her 2,356, but she will have to pay an additional 2,484. So these amounts net to each other, and you'll notice that the federal tax is slightly above our tax credit from the spousal amount. So we're paying more tax. If the net effect is more tax, why would we do this? We would do this because we'll also receive that additional dividend tax credit of 2,487. So even though the spousal credit is not quite covered, or the additional taxes are not quite being covered by the spousal credit, we have additional tax credits that are driving that payable down even farther. So the overall decrease in taxes payable is 2,359. Our additional taxes we owe minus the spousal credit we use and the dividend tax credits. So by being able to transfer this dividend income, we can save over $2,300 on our taxes. So this transfer of dividends cannot always be done. It can only be done in a situation that will create or generate a spousal credit or increase the spousal credit. So what this means is we can only transfer dividends when their income is using up all of a spouse's basic personal amount, but not all of the dividend tax credit. So it's only functional when that low income spouse, when the income's, sorry, it's only functional when the spouse's income is below a certain threshold. So to help demonstrate that, exercise 1110, transfer of taxable dividends to a spouse. Mr. Albert Ho is 38 years old and has over $250,000 in net income and taxable income. So there's no deductions. The 250,000 counts for both for 2024. His spouse's only 2024 income is $8,500 in eligible dividends. In terms of federal income tax payable, would Mr. Ho benefit to use the election to include the eligible dividends received by the spouse in his net income? So since the spouse's income is only $8,500, their basic personal amount is covering it. The credit from it is covering the taxes that would be paid. So we could transfer the dividends, but Mr. Albert Ho is in the highest tax bracket. So the question is, will the additional taxes he has to pay be less than the credits he will benefit from getting the transfer? So that's what we'll look at. If the benefit of the credits is more than the additional taxes, we want to make the transfer. If the additional taxes are too high, then we might as well just leave it in the spouse's name and accept that we missed out on those dividend tax credits. So we will look at that comparison. So the wife's income is $8,500. The dividend will need to be grossed up. So the income that's actually being affected is $11,730. We received $8,500 of cash, but its after gross up amount is $11,730. The basic personal tax credit is removing 14,156. The reason we use this number is because the spouse's income is so high that they have the reduced basic personal amount. So we're using 14,156 instead of that 15,700 number. So the personal tax credit, 14,156, if we were to transfer it, meaning we have unused credit. This income's getting to zero, and we still have unused credit that could be transferred to spouse. So Mr. Ho is having some benefit under the current circumstances. But what if we transfer the dividends? If we transfer it, Mr. Ho's going to have additional taxes on bringing in those dividends. Since the gross amount is 11,730, 11,730 at his tax bracket of 33% means he'll have additional taxes of 3,871. Remember, under this situation, those dividends are not resulting in any taxes payable. So additional taxes will be 3,871, but we'll be able to increase the spousal credit. Right now, only 2,426 is being transferred. So we'll be able to increase that spousal credit by the amount that was being used to reduce the dividend income. So 11,730 times the credit rate of 15%, we will save 1,760 in taxes by increasing the spousal credit. We'll also save an additional 1,762. That takes 38% of 8,500. That's the gross up. So 38% of 8,500 is trying to isolate that gross up portion that's supposed to represent taxes already paid by the corporation. And the federal portion of that gross up is 6/11ths, if you remember this when we talked about dividends. So 6/11ths of the gross up is 1,762. So our taxes increased by this much, and then they got reduced again by 3,521. So the net effect is actually an increase of taxes. So even though we were able to use more credits, because of our significant tax bracket, the tax effect is too high. The net effect is additional taxes. We don't want to pay more taxes, so let's just not do the election. Let's not transfer the income. If it results in an increase in taxes, then we don't want to do the election. If it results in a decrease of taxes, if it saves us money, then absolutely we want to do the election. The election allows a transfer of all the dividends from a spouse or common law partner. So it's not a matter of just saying, well, sorry. It's not a matter of just saying, let's only transfer some of the dividends. It's kind of an all or nothing thing. If you do this election, all of the dividend income is moving over. So we'll transfer all of the dividends if the transfer will create or increase the spousal credit. If it doesn't create the spousal credit, that must mean the spouse has other income that's already being dealt with those personal tax credits. So that means the income's high enough that the dividend tax credit should be usable. Now, maybe it's not being used because we have medical expenses and other credits that are filling that gap, but we can't transfer the dividends unless it's going to generate a spousal credit specifically. Okay, so that's our video on transfer of dividends. When we come back, we'll talk about charitable donations, how they relate to property. Thank you for your time. See you in the next video.